Trump's tariff gamble, defiance in the face of market chaos and global backlash. How a high-stakes economic strategy sent markets spiraling, confused allies, and left corporate America fuming. At a time when American families are watching their 401(k)s wobble and small businesses brace for higher costs, President Donald Trump doubled down on a sweeping tariff strategy that's already rattling the global economy. With Wall Street in retreat, foreign nations retaliating, and CEOs furiously dialing Washington, the question gripping the nation is this: is Trump's bold move a masterstroke or a ticking time bomb? On a week that saw U.S. markets plunge for a second consecutive day, Trump opted not to clarify his plans from a factory floor or a podium flanked by workers. Instead, he headed to the golf course at his Mar-a-Lago estate, leaving a trail of unanswered questions and economic turbulence in his wake. This split-screen, presidential leisure amid financial distress captured a moment of stark contrast, highlighting both Trump's defiance and the chaos unfolding around his policies. The Dow entered correction territory, dropping over 10% from its December peak, after China announced retaliatory tariffs of 34% on U.S. goods. This move followed Trump's own escalation, an additional 34% tariff on Chinese imports, on top of an existing 20%. These tariffs, framed by the administration as a crackdown on China's role in fentanyl exports and trade imbalance, triggered fears of a full-blown trade war. Publicly, the White House insisted that the president remained laser-focused on tariffs, sending foreign leader updates even as he hit the fairway. Privately, the situation was more nuanced. While some advisors painted Trump as unshaken, others acknowledged a growing concern over market dips testing his limits. Behind closed doors, debate raged within his economic team about the strategy's scope, purpose, and timing. On social media, Trump projected strength. "This is a great time to get rich, richer than ever before," he declared. But these bombastic claims clashed with internal confusion. Was the policy about reciprocity, leverage, or permanent restructuring of global trade? Allies and lawmakers weren't sure. Even Trump's top economic officials struggled to speak with one voice, scrambling to craft talking points that could be distributed across Capitol Hill. Meanwhile, corporate America erupted in frustration. CEOs from major companies warned Treasury Secretary Scott Bessent that these tariffs would raise prices without reversing offshore manufacturing decisions made during Trump's first term. In fact, many had already moved operations from China to Vietnam only to now face a 46% tariff there as well. "There's no endgame," lamented one executive. "We'll just have to make fewer shirts and sell them for more money." Several companies reportedly considered suing the administration, questioning the legitimacy of the national emergency Trump cited to justify the tariffs. But fear of retaliation kept most criticism off the record and off the airwaves. When one company privately suggested the tariffs would hurt more than help, a Trump official allegedly threatened to double them. While dissent simmered in Washington and Wall Street chat threads lit up with anxiety, Trump's messaging continued to blur. On Thursday, he implied countries could negotiate before the Friday midnight deadline. By Friday morning, he declared his policies immutable. "My policies will never change," he wrote. This inconsistency unsettled allies abroad and lawmakers at home. Yet some countries saw opportunity. Trump began bilateral talks with Vietnam, India, and Israel, hoping to strike separate deals that could serve as pressure valves amid rising global tension. Vietnam, according to Trump, even proposed eliminating tariffs altogether if a mutual agreement could be reached. Still, backlash came not just from international partners and business leaders, but also from within U.S. institutions. Federal Reserve Chairman Jerome Powell noted the unpredictable nature of Trump's tariffs, warning of elevated risks of inflation and unemployment. Powell, often the target of Trump's ire, was again publicly pressed to cut interest rates, which Trump described as a way to change his image, and quickly. Inside the West Wing, some aides pushed for a pivot to tax reform, hoping to refocus public attention on simpler, more popular measures like eliminating taxes on tips and overtime. These plans, however, remain in the drafting stage, with partisan divides complicating the path forward. The tariff debate had already sown division inside the administration. National Economic Council Director Kevin Hassett, who championed reciprocal tariffs, found himself pulled between shaping the new trade order and trying to advance the president's tax agenda. Alongside Besant, he negotiated with congressional Republicans even as lawmakers demanded clarity on the tariff chaos. In their absence, Trump loyalists Peter Navarro and Howard Lutnick filled the vacuum, reinforcing the president's hardline stance. Navarro, a vocal supporter of tariffs as a tool of economic nationalism, was instrumental in shaping the final policy rollout, despite pushback from more moderate voices. Some insiders believe Trump's affection for tariffs is deeply personal, a legacy he wishes to cement. But to many observers, it's a high-risk bet that's destabilizing relationships with allies, infuriating American corporations, and jeopardizing financial markets, all while offering no clear resolution. Ultimately, whether Trump's tariff strategy is a tactical masterplan or a perilous gamble remains to be seen. But one thing is certain, as global retaliation mounts and investor nerves fray, the eyes of the world, and especially the American public, are watching what comes next.